Welcome to today's webcast. KPMG has been approved by NASBA to deliver CPE-worthy training. In order to receive CPE credit, you must attend for the entire session and participate in interactivity checks. Interactivity checks will appear on top of your media player and may or may not be verbally addressed by presenters. Participation is tracked, and failure to participate will result in denial of CPE credits. If you have any technical issues during the webcast, please submit a question through the Questions and Answers panel, and our producers will respond to you directly. Please submit all content-related questions through the Questions and Answers panel.
Welcome everyone to the last day of our 2022 Global Financial Reporting and Valuation Conference. My name is Ryan Marin and I lead our valuation practice here at KPMG. And I'm joined today by my esteemed co-host, Patrick Ryan.
Ryan, thanks. For those of you guys that I didn't meet earlier this week, my name's Patrick Ryan. Really excited to be here, and I run KPMG's Accounting Advisory Services team. As an aside, I'm joining you today from KPMG's Ignition Center, which is within the Capital One Arena in Washington, D.C., and we're hosting a client here for a transformational finance session. For anybody out there who's interested in talking with KPMG about a similar session and joining us down here at the Capital One Arena, please reach out to me directly.
Nothing like a shameless plug, right?
Absolutely.
Perfect timing. Well, hopefully everyone was able to join some of the sessions either in person or virtually on Monday and Tuesday. But Patrick, for those who may not have been able to attend some of those sessions earlier this week, can you provide us with a quick recap?
Absolutely. So quick recap on the sessions. Really hope everybody caught the keynote speaker, NBA and collegiate all-star Shane Battier. It was a great inspirational session. We then moved and talked about the global economy, some ups and some downs and some things to consider over the next year. We talked about really talent, but also how data and analytics can help you with hiring, recruiting, and thinking about your overall people op model. And then we also had a crash course in cybersecurity, some really interesting things on the SEC's agenda, but also some perspectives from some wonderful panelists on things you might expect to see in the near future. We had a great night together, an afternoon together on Monday, but then on Tuesday, we kicked off the day with a regulatory and tax update from both Jenna Kuna and who we're now affectionately dubbing Sean Nostradamus Haley, gave us some great predictions on what we might see over the next year from the Republicans and Democrats, the tax agenda, and some things to be prepared for. So I thought that was a great session, really great way to kick off the day. We also talked about a panel discussion around the ever-evolving topic of ESG, got some different perspectives about some things that each of you may be thinking about in the near future. Also got some view on where percentage-wise CAOs are today, so that's a great one to check out. And then to close out the conference, Brian Smith led a really great panel discussion around the challenges that the CAO suite faces during the course of integrations and transactions. So another really, really great one, and a huge thank you to all the panelists that made those discussions so wonderful.
You know, it's always hard when we're trying to go through the agenda and the theme months in advance, what will be, the hot topics of the moment that will most interest all of you. And hopefully you found that there was a nice, thread through all of these sessions that we had. And I thought there was a lot of consistent messages from a variety of speakers, and really just highlighting how complex the world is right now. And there's just a lot to think about regardless of your role in your organization. So for any of you that may have missed any of the sessions earlier this week, don't worry because replays are available via an on-demand on the virtual platform, and you'll be getting emails about that hopefully within the next week. So watch your email for more information. So on
Ryan,
behalf
I'm
of
going to be
Patrick,
checking out I'm going to go back and check out the Shane Battier discussion for sure, just to get a little motivation.
Yep.
So even for those of you guys who joined, I hope you'll go back and check out the sessions and see anything that you missed, or share it with your colleagues that weren't able to join.
Absolutely. So on behalf of Patrick, all the partners at KPMG, thank you for attending this year's conference. It is really important to us to have this conference to be able to connect with you and we certainly value our business relationship with each and every one of you. We look forward to connecting with you all virtually and in person in the coming months. And before we turn it over to Michele and Tim to hear about what was discussed at the AICPA conference and then get into our industry-specific sessions, let's start with a short message from some of this year's steering committee members.
At KPMG, we collaborate with our clients on the toughest business challenges. And we wanted to take a moment to share insights from a few members of the GFRVC Steering Committee.
Hi, this is Ken DeVries from Hub International. I am Hub's Chief Accounting Officer for the last 8 years. I started my career at a Big Four public accounting firm. I really believed in the need to continue to train and develop both myself and future generations. Annually, I was an instructor at national training seminars. I was also very active in local office and specialty training. While I continue to stay current on technical matters, it is even more important to be a well-rounded professional. As such, training in matters such as EQ, leadership, cryptos, and current events and insights is where I spend the majority of my time today. Similar to everybody in the world, my time is limited. There are only so many hours in the week, month, and year. Notwithstanding that constraint, training and development remains an area that I am not willing to shortchange. I am very selective in the events in which I participate on a regular basis, and I continue to be excited about KPMG's Global Financial Reporting and Valuation Seminar. I have been on the steering committee a couple of times, and more importantly, I block out my calendar for the conference.
Hi, I'm Leslie Nagy. I'm the Vice President and Chief Accounting Officer for WM, or as many of you probably know, Waste Management. Been with the company for about 5 years, actually almost exactly 5 years. So thinking about challenges that our company is facing or issues that we're currently working through, there's a number of them for us. I would say the two biggest categories are technology and talent. We went live on a finance ERP system in early 2022, and then in June of 2022 went live on a human capital management system. And throughout this whole year and last year, we've been working on digitalizing our customer service experience. So lots of change going on both for our customers as well as for our employees around technology. We found KPMG to be very valuable partners in their accounting advisory services group. We've utilized them in a number of different ways, whether it's with assistance on technical accounting issues that come up in our day-to-day work, or whether it's related to complex acquisitions or divestiture situations. And the valuation team has worked hand in hand with us on our transformative acquisition we did a couple of years ago, as well as they've continued to help us with acquisitions we did in 2021 and 2022. And we keep going back and keep asking for their assistance because of the value that we get out of that relationship and the way that they're able to deliver the work on time, on budget, and with really insightful assistance throughout the process.
Hi, this is Steve Rivera from Johnson & Johnson. What do I expect for 23? A lot of work for the accountants for sure. But more importantly, we're going to see, again, the changes in financial reporting continue to evolve, particularly as we see more and more information being requested of preparers on ESG in 23.
On behalf of KPMG and the Steering Committee, thank you for joining us at this year's Global Financial Reporting and Valuation Conference.
Welcome, everyone. My name is Michele Meadows, and I'm a partner at KPMG. I lead KPMG services surrounding restatements and other financial reporting related matters. I'm joined by my colleague, Tim Brown, also a partner at KPMG in our Department of Professional Practice. Tim is the Audit Reporting and SEC Matters topic team leader. We are pleased to provide an update on the 2022 AICPA and CIMA conference on current SEC and PCAOB developments, which were held this week in Washington, D.C. Conference attendees heard important information and insights from representatives from the SEC and FASB staffs, the PCAOB, the Center for Audit Quality, as well as public accounting and legal professionals, and the preparer community. We will summarize the 3 full days of content for you today, focusing in on the top 6 takeaways from the conference depicted on the slide here. At the end of the session, we'll also provide you with a link if you're interested in reading a bit more about a particular session at the conference. I don't know about you, Tim, but I look forward to this conference each year, and it was really great to be back in person with everyone after 2 years off.
That was amazing, Michelle, and thanks. We're less than 24 hours from the end of the conference, so I think, we've had a lot of information thrown at us. We're still digesting a lot of it, but it's great to be able to also present some of that here. So if we move on to the next slide, I think what you'll see is that we've got a number of key takeaways. Trying to hit the highlights here. Obviously, we don't have 3 days to go back through everything for everybody, and I'm sure you wouldn't want us to do that anyway. But really, one of the key takeaways that we have from this conference, and I think it underpinned almost every single session that we listened to, was investor protection. It's the core tenet of the SEC, and today's commission really has moved more towards investor protection than the other 2 tenets that it has. And I think that comes through in everything that we saw this week, right? So it came through in the remarks from the commission and the commissioners and the staff that spoke. I think at one time during acting Chief Accountant Paul Munter's speech, I actually had wished that I had counted the number of times he had said investor, because it was almost like every sentence he was mentioning investors. So it's gotten to that level of importance, I think, for the SEC at this point. And I think that theme we'll see through future rulemaking. We're seeing it through their comment letter process and all the like. So there's more to come in that area. I think similarly, actually, the FASB and the PCAOB this week reminded us that they have moved more to that investor protection focus as well. Through the FASB's agenda setting process, they've been doing more reach out to investors, trying to find out what kind of information do they want to see in financial statements, where should GAAP be going, what's the best type of information to be getting out to them so that they can have that information to make that informed investing decision. Also, the PCAOB is starting to ask investors more of what types of assurance do they expect? What should be assured and what level should it be assured at, to inform their agenda as well as they move forward. So I think from an auditing perspective and accounting perspective, we're seeing that similar shift towards that investor lens in everything that they all do. I'll just mention that the SEC and the FASB both have separately investor advisor committees, and they look to them for guidance. So those investor advisory committees actually make recommendations to both of those boards or the commission, and they take those very seriously. Those do come out every so often, and there has been one recently from the SEC's IAC as well. So I'd recommend that you go take a look at those, pay attention to those, because I think they are informative for the type of things that the SEC or the FASB may be thinking about moving forward. Well, how do the regulators really think about protecting investors? Well, it's definitely through enhanced disclosures, and Michelle's going to get into that part of the conference here in a few minutes. But in order to make an effective disclosure, first, a company really needs to think about the quality of the information that they have to be able to make that disclosure. And another one of the core themes that we heard during this week was quality amid economic uncertainty. The current macroeconomic environment was discussed at length in most of the sessions, and it really honed in on the uncertainty that's created by the affairs of our global community right now. So if you take a step back and think about it, we're transitioning out of pandemic and into a new normal. We have a global economy, and some are asserting that we're going to enter into a recession within the next year. We've got rates of inflation that we haven't seen in a very long time at this point. Interest rates are increasing at a rapid pace. Oh, by the way, we're also transitioning to a new benchmark from one that we've had for decades at this point. We're dealing with global supply chain issues that are lingering both from the pandemic and then also have been accentuated because of the Russia invasion of Ukraine. So because of all of this, there's new risks that are out there for companies. And when we step back and we think about what those risks are, a lot of them create new incentives and pressures that really create also new risks of fraud. And I think that was clearly highlighted through Commissioner Peirce's statements, acting Chief Accountant Paul Munter's statements as well. And a lot of the staff had honed in on this. Again, SEC, FASB, and PCAOB alike all stress the importance and these new risks of fraud that are coming out. So not only is it the company that needs to be thinking about it, but it's your governance structure. So board members, audit committee members all need to be cognizant that these risks are emerging and start working with management of your company to be asking questions of how are they approaching these risks that are coming out and how are they thinking about it? How are we taking our company forward at this point? So one of the ways I think that this was stressed was these uncertainties really create new judgments and things that need to be thought about in estimates by management. And so something that really companies should be thinking about as you head into new year is what are those new judgments? What are the estimates that may be changing because of new assumptions? How does that impact the financial reporting environment in which you live? So we're thinking, just based on our, quick reaction, like I said, less than 24 hours at the end of the conference, companies should be investing the time now to think through the impacts that all of these world events are going to have on your business. So, like I was saying, assumptions in your estimates may have changed, or it just may take a lot of thought to try and figure out whether or not they have changed. The impacts of the world affairs extend not just to your four walls, but beyond that, right? So all of your suppliers, your customers, vendors, partners, financial institutions that you're dealing with are all dealing with the exact same thing at the same time. So the pervasiveness of what we're seeing at the moment really permeates throughout financial statements, disclosures, and all the disclosures that sit outside your financial statements as well. At the same token, we heard from the PCAOB that audit firms were encouraged to think about this in the same way. So as we head into audit season, audit firms are going to be rethinking about their audit approach, rethinking about whether or not there's fraud risks or other risks in the environment. They may impact the companies that they're auditing. And that may lead to new procedures or new questions that may be coming during year end. So it really is going to permeate through a lot of, I'd say the next number of months as we head into 22 reporting season and beyond. Like I said, boards really need to oversee both management and the auditors. So having the conversations today about what's happening, how are audits changing, what new procedures might be happening, or what are they seeing within the company that they feel might be able to be enhanced, because there's a lot of great perspective that's coming from your audit firm in terms of seeing where things may be able to be improved. So once all of that's kind of worked through, the SEC really hammered home that companies should be making those considerations evident to investors. How do you do that? Well, that's through enhanced disclosures. So Michele, maybe what did you hear during this week about how they're expecting disclosures to change moving forward?
Thanks, Tim. Yeah, certainly one of the key themes was that disclosure should be company specific and transparent. I think this is a great time for companies and their disclosure committees to take a fresh look. The key buzzword, not only was investor a key buzzword, but disaggregation was also a buzzword, and I'll talk about that in a moment. But the key here is a company should be considering whether their disclosures reflect today's environment without simply relying on the past and just rolling forward boilerplate language. That's something that is getting increased attention. Mr. Munter and the staff in their remarks, again, were focused on protecting investors and providing decision useful information. That was another kind of catchphrase that we heard throughout the course of the conference. So let me just touch on disaggregation of financial statements and disclosures, because I found this very interesting. Munter set the stage in his opening remarks, which included the observation that investors are asking for more disaggregation of financial information. He stressed that there is nothing precluding a registrant from presenting disaggregation of disclosures, even if they're not currently required by the accounting standards. He encouraged companies to consider whether additional voluntary disclosures could increase the effectiveness of the communications to investors through the financial statements. And interestingly, he provided a couple of examples. One thing he suggested was for companies to consider whether components that are part of a statement of cash flows presented under the direct method, in addition to the indirect method, which I think substantially all companies are currently using, would be useful to financial statement users and investors. He also provided some thoughts that disaggregated financial information in the areas of income tax reporting and income statement line items such as expenses may be useful to investors. And lastly, he remarked on financial reporting in the current environment, which is dominated, as Tim, as you said, by uncertainty. His main concern from a preparer perspective is transparency, and he stressed the importance of disclosures about estimation uncertainties and the underlying basis for critical judgments in the financial statement notes. So as we continue through the conference, FASB Chair Richard Jones reiterated the concept of disaggregation by noting 3 current projects on the FASB's technical agenda. The first being segment reporting. The proposed improvements to segment reporting would require public entities to disclose significant expense categories in each reportable segment, in addition to the disclosures already required today. That project is currently accepting comments, so feel free to take a read of it and provide your comments to the FASB staff. There's also income statement disaggregation. This project is not as far along as segment reporting, but the board decided that the scope and objective of this project should be based on the decision usefulness of the income statement through disaggregation of relevant expense line items such as employee comp, depreciation, and amortization expense. And then the board is also considering requiring disaggregation of costs capitalized during a particular period, such as raw materials or labor related to inventory. And then the third project is the income tax disclosure project. The FASB's refocused its scope to meet the needs of financial statement users when making capital allocation decisions. So there's an exposure draft, or ED, that we expect to be released in early 2023. And we expect that that will require disclosure of income taxes paid in paid year to date, disaggregated by federal, state, and foreign taxes, with some further disaggregation for individual jurisdictions to the extent that they exceed 5%, and disclosure of rate reconciliations on a more disaggregated level in specific categories. So that's a lot around disaggregation. There were some other themes around disclosures. Climate-related disclosures were also a topic. One of the speakers on the panel observed that the SEC has issued more comment letters recently related to climate-related disclosures. So that speaker emphasized that these inquiries don't depend on the SEC's final climate rule, but in fact are based on some guidance that was issued back in 2010, as well as the Dear Issue or letter the SEC issued in September of 2021. And one of the common themes here, or questions posed by the SEC, this panelist observed, was why is there a disconnect, or why is there information included in a registrant's sustainability report, but it's not included in the 10K? So just something for folks to think about particularly as you're thinking about your 10Ks that may be coming up here in the near term as we enter into earnings season. In addition, registrants should consider whether year-end disclosures related to any lingering effects of COVID-19 or the Russian-Ukraine war are material and should be included in the financials, as well as considering whether there's any disclosures required for China-based issuers. So quite a bit with respect to disclosures that we can expect to see and for companies to think about. So certainly that was one of the key topics that were discussed over the course of 3 days. I think I'm going to switch
Michele,
gears. All right, go ahead. Yeah.
Sorry, I just thought maybe I'd jump in here and also just talk a little bit about some of what the Division of Corporation Finance's OCA was talking about during the conference. And a lot of that was disclosures based as well. So certainly they're reading the headlines right there. And as Michele just kind of articulated, looking through all of those current economic uncertainties and the global events that are going on right now. And they really are looking through your filings, trying to figure out where those impacts could be to your business. And their expectation is that companies are going to be providing that broad-based, through the eyes of management type disclosure, through the MD&A, through the rest of the filing, right, that wrapper around the financial statements. There's a variety of areas within your filing where that information could reside. And so it's really important to also sit down with your disclosures, think about them now. As Michele mentioned, there's a number of those Dear Issuer letters out there, and walk through the comments that are in those letters and think through in a holistic way where the impacts to your business could be and where could those disclosure changes come from. One of the things I think that they were emphasizing was to the extent that you have a risk in your filing that's been hypothetical historically, think about whether that risk is actual risk at this point. Has something actually happened to your business where you need to make an update? It's not hypothetical anymore. So it's just another area where, different or changing disclosure may be appropriate. One item of particular note that the Division of Corp Fin did bring up was related to critical accounting estimates. So they've observed in the last couple of years since the amendments came out from Reg SK, increasing the disclosure requirements around critical accounting estimates, but they have not actually seen much change in the way of those disclosures. So I think what they were saying was really they're putting registrants at this point on notice that the information that's required by those amendments in SK, they don't feel has been appropriately disclosed in many cases, let's call it. And so I do think that coming into this filing season and with the review of these filings, CorpFin is going to be paying very close attention to those disclosure requirements. So I'd encourage you to pull that back up, go through each item individually, and think about, has the amount been quantified? Does an investor really understand what the critical accounting estimate is and why it's important to you and therefore should be important to them? So thanks, Michele.
Yeah, great points and a great segue into the next key tenet of the conference on the changes in reporting landscape and what that means to all of us. So the headline here was that technology is rapidly changing. And as technology changes, financial reporting and auditing functions change. We're using a lot more technology, and it's creating more cybersecurity risk. And so the key question folks should be asking themselves right now is your governance and oversight sufficient? And are investors adequately informed about your risks associated with cyber? There was an entire panel dedicated to cybersecurity. And they noted that the use of digital technology expands what they call the attack surface. And so there is a tremendous focus by the staff to address risks and to ensure companies are adequately disclosing to investors the risks associated with cyber and a particular company. So I think that was very interesting. And in keeping with the SEC's theme of investor-focused disclosures, the panel discussed a couple key things around disclosure issues and cyber. not only the disclosure of cyber attacks themselves, but also disclosure of policies and procedures. So let me talk first about the disclosure of cyber attacks. So disclosure of material events like a cyber attack is required under current SEC rules. And one of the panelists observed that historically there's been a low number of disclosures regarding cyber attacks, and that it perhaps felt disproportional to the number of headlines we all hear about. And he suggested that this may be due to how registrants apply the materiality guidance to cyber attacks. So David Hirsch from Enforcement reminded the audience that materiality is based both on quantitative and qualitative assessments. And so from a qualitative perspective, the SEC would expect registrants to consider the importance of the event, even though it might be considered quantitatively immaterial. And they gave an example which was interesting. They said, imagine that the CEO's computer is hacked. Well, that event quantitatively is maybe immaterial because it's one computer, but it might be very important qualitatively, depending on the nature of the sensitive information that was contained on that computer. So that might be an example of a situation that a cyber event should be disclosed because it's qualitatively material to an investor. The other point I wanted to make is that the SEC proposed cyber disclosure rules that are out there that would introduce requirements specific to cyber attacks. So if that rule came through, a material attack would be disclosed on a Form 8K within 4 days of determining that the attack was material. So that differs from what's required currently. And the enhanced rulemaking would also require certain disclosures around cybersecurity policies and procedures that a company has. Again, the key here is making sure that investors are aware of the risks that a company is exposed to. They noted that investors must be kept apprised of these risks. For example, they threw out some numbers that said the average cost of a cyber attack is around $10 million, and some attacks could cost companies billions of dollars. So I found that really eye-opening and interesting, and it is a bit interesting that we don't tend to hear a lot in financial statements surrounding cyber disclosures. But so that's something that's a hot topic, and it sounds like this audience has heard a bit about cyber during the course of the conference these past couple of days as well. So with that, Tim, maybe you can give us an update on some of the other emerging areas that we heard about in the conference.
Yeah, thanks again, Michele. So, I mean, there's so much going on, like I was just talking about, in terms of emerging areas, but there's more going on, right, from our landscape as well. And as you talked about cyber, I mean, one of the questions that one of the panelists fielded was, is the SEC going to be commenting more on cyber risks and things heading into this year end? And the response was, for now, until that rule comes out, probably not. But I think once we see the emergence of that rule, that certainly could be an area that the SEC hyper focuses on. Right now, it's very difficult for the staff to know if there's been a cyber attack, right, until it's been disclosed. So it's been regulated a lot through enforcement at this point. But once those disclosure requirements really set in, I think we are going to see more in the way of comments coming from the staff in that area. Another burgeoning area is crypto. Obviously, it's all over the headlines these days, not necessarily for good reason as yet, but there's certainly a lot of interest. Companies are starting to foray into crypto. There's a number of entities that are obviously heavily exposed in the space, but there's more pressure than ever that companies who are involved in that space or impacted by events to continue to disclose, how are they impacted, what's their exposure to crypto, and how are investors going to be impacted by that. But there's also just a lot of uncertainty right now in terms of specific and relevant guidance. And that's certainly both from a regulatory aspect as well as from an accounting perspective. We know that the SEC has not acted on this. Commissioner Peirce made some remarks during the conference. She had a fireside chat, and she actually articulated that she really feels strongly, and I think the sentiment is kind of shared around the SEC, that they do need to act on this and try and make some sort of ruling. We've seen Congress take this issue up over the past year. threatening to introduce legislation that would define what some of those cryptocurrencies are in terms of equity or liability. I'm not sure really anyone wants to get into some of that, having Congress kind of dictate what these things are called. So I think there is a growing groundswell, especially with the events of the last couple of weeks, that action may come on this a lot sooner. Certainly the FASB is starting to act in terms of thinking through what GAAP is going to look like. And Paul Munter highlighted that while we're applying GAAP right now as it exists, nothing is really on point in this area. And so he thinks it's high risk. And interestingly to me, he made a point that the risks in this space really need to drive what the accounting is. And so I think it'll be interesting to see where does the FASB take that based on his remarks and his thoughts. The staff also got into a little bit about crypto lending. I'm not going to get into too much detail because we can get in the weeds pretty quickly and just don't have the time for that right now. But the headline, I think, is that those transactions really should follow more of a traditional financial lending accounting approach. And so there's more details that are going to be coming out on that. And certainly some of our publications will highlight what that accounting might look like. If you're in that space, I encourage you to reach out to your advisors or your accounting teams and have that discussion. And of course, as always, you should be thinking through, are you participating today? What does that participation look like? What are my disclosures in this area? And all of the incremental disclosures in the MD&A section of your filings, how do you think that through moving forward? So we couldn't have gone through the conference without talking about climate and ESG, and Michele mentioned a few of the points. I think that really the regulators didn't necessarily say a lot in this area during the conference. We have the proposed rule out there where they're going through the 15,000 comments. I think one staffer actually even joked that he liked his job too much to speculate as to when the rule was coming out or give any information because they're just not permitted to. So the answer to the question of when is this happening, we just don't know. Everything's speculative at this point, but we're still in that kind of hurry up, get ready, and then wait for it type mode, right? So a lot of the focus was from the preparers, from investors, and from the advisors as well. And that really was the theme of you need to start sitting down now and thinking through what do you need to do, what information do you need to have, what processes and controls do you have in place or not have in place. Perform that gap analysis now to try and figure out where is some of this information going to come from. I think I heard it multiple times during the course of the few days walking the halls, but everyone kept saying the bus has left the station, right? We have a global view on these rules at this point. There's been a lot more coming out internationally that we've seen. Global organizations are already impacted, whether you have operations overseas or maybe you're just doing business overseas. There's a potential that one or more of these new rules that's already coming out may impact you. And there was a lot of discussion around that as well. Just the fact that those rules are much broader and their scope covers a whole lot more than even what the SEC's proposed rules say at this point. There was speculation that the SEC proposed rules, due to the litigation risk and all of that, are actually going to be scaled back in its final form. Again, yet, we're going to need to wait to see what happens there. So I think one of the other broader messages on ESG is internally, as you're starting to think about these things, you really need to bring that cross-functional expertise and dialogue to bear on what needs to be done. There's a lot of different parts of your organization that are going to be involved in this, parts outside the finance function that are not traditionally used to controls and the processes that the finance function is used to. And the finance function is going to need to get up to speed on a lot of this information, a lot of the frameworks that are out there, eventually what the SEC rules say, and then get ready for potential assurance on that information as well. So there's just a lot to do. As we think about ESG, I'll just briefly mention that we do expect the human capital disclosure proposal will be coming out probably during the first quarter of 2023 as well. So just as you feel like there's so much going on, there's even more to come. we're expecting a lot more disclosures that they're going to propose to be required. It's yet to be determined whether there be any financial reporting impact on that. We don't think there is at this point, but they may ask the question as to whether or not, respondents think there really should be. COVID-19 was another topic of emerging areas, and you're going to say, Tim, where have you been? Have you been living under a rock for the last 2.5 years? COVID's over. And the SEC certainly stressed that, even though it's kind of coming to an end, there is a thought that you need to revisit some of those that disclosure guidance that they had put out, because sometimes the inverse of some of the impacts, really require some disclosure and may have an impact on your business. Things like returning to work. What are the costs and impacts to your business from that? There also could just be lingering impacts from the supply chain issues and impacts to, what do your products look like out in the marketplace right now? Has there been any change in the business direction or business operations that really should be modified in those disclosures? And maybe last but not least, non-GAAP is probably less of an emerging area, but more of an evolving area. And so, we've seen that this has remained at the top of the CorpFin comment letters for a very long time now. And actually, just before they got on stage, CorpFin released 2 new and 2 revised CNDIs, or compliance and disclosure interpretations. It's really their guidance on non-GAAP metrics. And the reason they adjusted these was to provide better insight into how the staff actually thinks about and views non-GAAP measures. And so it's meant to provide a registrant with more information as they're considering non-GAAP measures heading into this filing season about the things that they may not find that comply with the SEC regulations. Now, I don't really think that these new CNDIs or revised CNDIs change much in the way that the SEC staff is going to interpret the measures. But again, I think it provides a greater transparency and something to point to for companies to think about, really, how is the staff going to react to this? So maybe with that, Michele, I know another and maybe the final topic that we really saw underpin this entire conference was talent. So what did we hear from that side?
Yeah, certainly. It was interesting. I think every agency that came on stage had a plug to say that they were hiring, which I think this is the first time at one of these conferences that I've actually heard them say that they're hiring across the board. So I found that interesting. So if any of the audience is looking to start with one of those agencies, submit your application. But the headline here, seriously, was that we are united in a desire to grow the accounting profession. And again, every single agency that was on stage permeated that message throughout the conference. The AICPA chair opened the conference by stressing his 3 areas of focus, which are people, skills, and trust. And in staying relevant and addressing the challenges, he emphasized that a commitment to diversity, equity, and inclusion is essential. This theme continued throughout the conference, where attendees joined on Tuesday a session hosted by officials from the Center for Audit Quality, including a critical topic: how the center is working to recruit a new and diverse generation of talent in the public accounting profession. Certainly, everyone recognizes that there's a need there. There's a recent decline in students that are pursuing accounting degrees. And historically, there have been barriers to access for students from underrepresented communities, which is putting a magnifying glass on the profession's collective efforts to open the doors for individuals and future talent and leaders in our field and profession. So the sentiment throughout the conference was that the responsibility for continuing to grow the talent pool of diverse candidates is incumbent upon all of us in the accounting profession. So I felt that was really interesting, and it was really, I think, a good moment to hear all of this and feel the sentiment that everybody is so focused on people and talent and growing our profession. So I think we've covered off most of our topics here. I guess, Tim, just maybe to circle back on something you said, I heard a lot at the conference around comment letters. And one of the key questions that I think got the most votes was, why can't the staff tell us if we've been reviewed or if our comment letter is closed, or can't you just send us a letter telling us we did a good job? So I found that interesting. So I don't know what your perspective was on that.
Yeah, no, you're right. That was a common theme that got upvoted in the Q&A chat in the app very frequently, and I think for a few sessions as well. And it is interesting. I think most companies would like to understand if they've been reviewed, and so I think what was being discussed was kind of the process that the staff goes through in terms of reviewing. Just as a quick reminder, the SEC staff reviews companies at least once every 3 years. I think they mentioned if you're a larger company, you'll probably get reviewed more often, and it could be more of a financial statement review that gets done more often, or they could do a holistic review of the entirety of your filing. But it was very interesting to hear that, and I think I've heard this before, the companies just want to understand if they've been reviewed. I frequently tell, the companies that I work with that if you haven't heard anything in 3 years, that's really good news. But I don't know that it's permitted under the regulations at the moment. Certainly the way that the Division of Corporation Finance has approached this, they do not send those letters out. So unfortunately, companies aren't necessarily aware. But the one interesting point that I learned, I didn't even realize about the comment process, was that the SEC staff will actually call companies if they have oral comments. So a couple of things on that. One is, if you've been reviewed and there's information that they feel, maybe isn't presented in the best way, but isn't necessarily something that they would comment on, they might give you a call and just ask about an area in terms of asking whether or not there's other information that may be useful for investors moving forward. Or if they see an area that, is kind of burgeoning for you, they feel is impactful, they may call you and ask you how you're thinking about disclosing that information in future filings. And I think that, should be taken as a shot across the bow to say that maybe we should be rethinking that disclosure moving forward. The other area that they noted that's been occurring lately is the staff will actually send out a comment letter with written comments, but then call with a few additional incremental oral comments that are not written down, that are usually fairly nuanced and might focus on a particular area or two. Now, if you're responding to those comment letters, you do actually need to write down your responses. Those will get submitted back through a written submission, even though you'll never potentially get a written comment letter with those comments. If it's one of those just calling you to advise you type situations, then there's probably no response that's going to be required. But you're going to want to walk through with your advisors, both the accountants and your SEC counsel, potential responses for that. I did see too, Michele, in the chat, there was one, it's not necessarily a question, but a comment, but thinking through the use of technology just for the sake of using technology, and that could create a lot more problems. I know one of the themes that we saw, maybe goes a little bit back to the cyber comments, was that, we're just living in an environment now where technology is everywhere. It's pervasive. It dominates our day-to-day type interactions, right? So I don't know, any thoughts on that? I think that makes sense, but also perhaps it's a little unavoidable at this point.
Yeah, I agree. I think one of the key things that folks need to be thinking about is, if you are using technology and that technology impacts your financial reporting systems, you need to make sure you've addressed the risks and addressed it in your internal controls over financial reporting. So, you've got to have a well thought out plan when you are introducing new technologies. You don't want to just launch it and then have the controls, again, to the extent it impacts the financial reporting system, you don't want to launch into it and then have as an afterthought the internal controls aspect of it, because you could end up with some type of deficiency or weakness in your internal controls.
Yeah, and I know one of the questions that was received related to climate and ESG is just, are there any good systems out there right now, right, to capture some of that information? And I think the panel that took that question actually paused for a good 20 seconds. And, I think, I took that as the answer is no, but I think there is a lot of new technology coming out for some of these burgeoning areas as well, right? So working with your service providers in that way to start thinking through the processes and controls, there's certainly going to be a huge technology component to things like climate and capturing GHG gas emissions, and making sure that that information is captured appropriately so that it can be subject to assurance moving forward. So I totally agree. I just think that more technology is just going to permeate through our lives, in the coming years.
Yeah, totally agree. I think, to kind of sum it up, from my perspective, there wasn't any real bombshell issues that companies, I think, are going to be scrambling to address, like the big R, little r materiality, or now I'm going to date myself and say like the free rent period way back in the day where, an issue came out at the conference and folks who were close to filing were scrambling to address the new issue or the new guidance that came out of the conference. But I do think that all of the standard setters really set the stage, that there's an expectation that companies now are looking closely at their disclosures with more of an investor lens, and to kind of stay tuned as that guidance and mandates roll out, but that folks should be thinking about it this earnings season and making some changes. They're highly encouraged to make those changes now is what I kind of took away from the conference. Well, great. I think
Absolutely.
We are just at our time. Oh, sorry, Tim, did you have something to add?
Oh, no, I just absolutely agree. I think that was definitely the theme is, going to be looking for more disclosure. So, look forward to working with all of our clients on thinking all of these burgeoning topics through.
Exactly. Well, we've come up to our time. If we could advance the slide here. Certainly, if folks are interested in learning more, you can reach out to either myself or Tim. But if you wanted to get some more in-depth information, we have put out a series of publications. You can simply type frv.kpmg.us in your browser. You'll get access to a bunch of different insights around the conference, as well as reference libraries and CPE around a whole variety of other topics that are put out by our national office. So with that, I wanted to thank everybody for listening to us, give you a debrief. It certainly was a wonderful event, and we thank you.
Thank you.